What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our market open live stream here. So we should be all set, and I hope you all are doing great. We're about to absolutely go crazy here. If you guys can see me and hear me, just give me a thumbs up. I just want to make sure that the audio and the video is working well. There are no problems, no technical issues. Like yesterday, we had a pretty severe case because there was a lot of lags. So let me know in the chat if everything is working well, and we should be all set and good to go here. A lot of momentum pre-market. As you can see, QQQs are just charging higher on that 50 basis point rate cut. We're up over 2% right now. Absolutely incredible. We've got the S&P 500 up over 1.5%, and Nvidia here up over 3%, almost up to $117 right now, and Tesla also pushing up over 2.8, almost 3% on the day here. So we're about to see a very, very aggressive open here from the bulls. There's going to be a lot of momentum right off the bat. There's going to be a lot of gains right off the bat here, and I'm going to be making a quick call on the Nvidia calls that I have right now. So I've got Nvidia calls and puts. Puts are most likely going to be up like 90-95% that we sold earlier in the week, so I have no problems with that. But the calls, Nvidia has been kind of flirting in and around these 116, 117 level, and it's actually much better because it was at a much higher price last week. It essentially ended up closing in at just over $119, $120, and I rolled my contracts on Friday. On pretty much the last day, I rolled my contracts out to this Friday at about $111 strike. And so we are still below that price, so I should be able to, I'll take a look at the premiums, and just after the market's open here, we'll take a look at the premiums for 112. I feel like I can push up another dollar per share in capital gains. That's just another $600 profit for Nvidia, which I should be able to squeeze out if I can get a net credit. Today is also Thursday, so today is not the day when the contract expires, it's tomorrow. So it's usually a rule of thumb that if you want to roll contracts, do it one day before expiration. I'm not going to make the same mistake I did last week, because I waited until the last second to roll my contracts on Friday, and I did not get the best spreads. The slippage was very bad. Really only on premiums made about a net credit of just over $58 plus the $100 on the cash secured put. So that was about $150, but that's okay because Nvidia really hasn't gone anywhere in the last couple months here, but it is also starting to move higher. So we're gonna see how the market's open here. So everything is perfect video wise, perfect. That's good to know. And we are back to the normal streaming. I had a lot of things open yesterday. Because of the Thinkorswim, because of TradingView, because of a lot of different factors. And again, we had a little bit of a technical issue. Okay, let's see. Does Tesla look strong? Tesla looks strong right now. At the moment, of course, pushing up, but it's also coming up to a huge resistance, as we have discussed in our previous updates. It's got a big wall of supply on Tesla here in the 230s and 240s. So this right here is going to be that huge area of supply in the 230s and 240s for Tesla. So we got a big area of resistance here. If we're able to successfully break above 240s, the next target's going to be in the 270s, where we were earlier this year in July. That's where we got rejected and, of course, sold right back down. And this right here is going to be that resistance for Tesla. TLT, TMF, buy on dip. So, I mentioned this in our yesterday's market update, where I feel like majority of that move is priced in, right? Because the market's been expecting those rate cuts to come in, and the Treasury market, really the bond market's been front running the Fed for a long time. They've been coming down, and as a result, there's limited upside, so to speak, for TLT and TMF. Federal Reserve's pricing in for 6 additional cuts, 2 this year, 4 next year. So that's 6 cuts. That's about 150 basis points. So there is upside for sure, in my opinion, but there's limited upside. So the risk reward is kind of balanced right now. It's not really to a point where you're getting an asymmetric risk reward, right? So I think that's important to keep that in mind. So, okay, Vault says the rip your face rally or rug pull like never before. Yeah, one of those two events most certainly are going to take place today. So either we're going to be going to the moon with very, very strong momentum coming in, or the Wall Street's going to take this as exit liquidity to get out before things get worse. And look, our memory is very short term. I want to really re-emphasize on this point that yes, this is bullish. 50 basis points is fantastic, and I'm very, very grateful for the days like today, right? Because I'm mostly long. I'm really at this moment, I'm pretty much about 80% long invested in the markets with 20% invested in options, right? So at the end of the day, if the markets go up, benefits everyone, right? But at the same time, we have to have a very realistic expectation of the markets, of the returns, so that we can also calibrate our personal expectations, right? We can't just be bullish or bearish all the time and expect the markets to keep going higher. We have to assess the risk reward, how good or bad that is, so that we can actually deploy capital back into the market. So I think that's really important for everyone to understand. So this may be the only green September. It's possible, and we're about to also make history. If September actually ends up green, this is going to be the first time in 20 out of 20 times that we've seen when the markets were down over 2% in the first week, we have closed red for the entire month. So this might be the month where we actually make history with these aggressive rate cuts with the markets pushing higher. So it's possible that we end the month pretty much green in 2024. So KYI, the man says, sold because you were bearish. So KY, it's really, when you're assessing your own portfolio, it really comes down to a lot of different factors, right? A lot of different variables are at play. So that's why it is really important for everyone to do a self-evaluation on where do they stand when it comes to their risk tolerance, their time horizon, their financial goals and objectives. Because as I've said this before many times over, no two portfolios are ever going to be the same. There's not any two portfolios in the world that are going to be the same. Why? Because everyone has different goals, right? It's more art than science. You can't follow a strict set of rules or formulas or math to kind of guide your financial future. Everyone behaves differently under different circumstances. So we all got different risk tolerance and different time horizons and behaviors and financial objectives and even tax jurisdictions, right? So it's really important to do a self-evaluation on where you are and then do what is more reasonable for you. May not be the most rational thing to do, right? So just as a quick example, we were having this discussion earlier in our Discord where one of our members was talking about, when can we start buying in again? I mean, the markets are hitting at all-time highs. And I simply asked a simple question, right? How much are you invested already, right, in the markets? And that person said 75% and 25% cash. And that 25% is earning a 5% interest on the money market funds. So the next question was, are you comfortable with that cash exposure at 25%, or do you want to be more invested in the markets? Do you want that number to come down to practically 0%? Do you want to be all in the markets and be 100% invested? And that person was like, no, I like the idea of having some cash exposure, about 15 to 20%, and the rest, I may want to invest in. So there's your answer, right? If you're comfortable with where you are, you don't have to change anything. Let the markets do most of the work for you. So, it's really important to understand that if you just miss 10 or 20 best days in the market, you give up majority of those returns. So timing the market, it's really not worth it. Time in the markets will always beat timing the market if you are looking at individual ETFs and indexes, right? So those are more aggregated S&P 500, NASDAQ indexes and ETFs. If you're looking at individual stocks, then yes, you have to have an understanding of fundamentals, technicals, what price versus value really means. Is the value what you're getting by buying at a specific price more, or is it less, right? That's what Warren Buffett, Benjamin Graham, Peter Lynch, Howard Marks, everybody teaches us, that when it comes to individual stocks, there has to be some objective understanding and analysis of where the price is versus what's the value of the company, what's the value of the business. Because at the end of the day, if you are investing in companies, it is really just your ownership in a business, right? You're buying a company at the end of the day. It's not really stocks or tickers. It's ownership in a business. So that's how you should be treating long-term investing anyway. So do a self-evaluation, see where you are with your risk, with your time horizon, with a lot of different factors that are going to play a very big role in your financial future, and then make a decision based on that. And we have a lot of different indicators to help us better understand and identify the risk reward. So for example, volatility is one of the best metrics out there, right? When the VIX is high, it's time to buy. It's worked in the past, and we've talked about it on the channel before, that keep your cash ready, right? Get ready to buy when the VIX is high. Done that a couple times already, and when the markets are ripping higher, volatility, of course, is coming down because of that inverse correlation that we have talked about on the channel time and time again. So volatility now 16.4, getting crushed absolutely down under 10% on the day here. So 15.3, the lower it gets down to, the better, the more cautious we need to be. The higher it gets, the better the risk reward, the better the buying opportunities. But of course, the lower it gets down to, the more cautious and the more alert we need to be. So I also sometimes I do get a bad rep for being bearish, but you go back to specific instances. Simply look at the volatility when it was higher. What were we doing, right? What were we doing? Come over to Discord. We were buying, we were putting in orders. During August 5th at the market open, August 7th, 8th, 9th, I deployed over $50,000 right about here when the volatility was really high. And then once again, during the August 21st, 22nd dips, didn't buy as much over here, but mostly was trading options in the first week of September, second week of September. And have also profited really well. So it is really important because it's really what you do here in these very, very rare events is what's going to dictate how you end up performing over the long term. And sometimes the best trade is no trade. So if you are confused, if you are unaware, if you're somewhat undecided, just take a step back. It's okay. Let the markets do their own thing. And you don't have to trade or make a decision that day. That's totally fine as well. Okay, coming over to everybody. Good morning. Good morning. Thank you so much for joining. Hopefully the stream is working a lot better today than it was yesterday. Yesterday was very, very good up until Jerome Powell started talking. And then my computer basically crashed. I cleared up a lot of memory today, got rid of a lot of junk, updated the MacBook as well, so it should be fine. So why is gold also bullish? Is there a hidden sentiment or message that is being missed here? So that is a good point. I think that is a good point. It's kind of interesting that, while we're seeing a bit of a risk-on rally in the markets right now, pretty much everything is pushing higher, and we can kind of take a look at XLK, which is up over 2.5%. And XLU, which is down, right? So 36 basis points. What does that tell us? What does that tell us? So I want to hear from all of you. So we've got over 400 people watching the stream right now. And I want to hear from everybody. What is today very much like? What's really happening with the markets right now? As you can see, technology XLK up over 2.5%. And utilities, which is the best performing sector, right? So it's up a little bit over I think 25% on the year, which is outperforming technology, and that ETF is down 36 basis points. So what is happening? What is happening right now? So pretty much everyone should have the answer to this question, but let me know in the chat, what do you think is happening? So we got rotation, risk on. It's a Ola says it's a trap. But yes, risk on is the answer, right? Rotation and risk on is the answer because money is rotating back into technology as utilities are selling off. And utilities tend to be a little bit more defensive part of the market where investors, for the most part, were hiding into utilities, were hiding into staples, were hiding into industrials and materials. A lot of those sectors, that's where the liquidity was going to. Because if you come over to our sector ETF, sector watch list basically. So let me just see. Let's see here. They keep changing. TradingView keeps making changes on their UI, and I'm just like, where did that go? Okay, so if you come over to sectors and go over to performance on a year-to-date basis, we still have XLU, which is the utilities ETF, up over 24%. Then we've got communication services, and this is mostly on the back of Meta and Google. Meta more specifically, Meta's hitting a new all-time high. I'll take a look at that in just a minute. I was watching the Mark Zuckerberg's reel on the Meta Ray-Bans, which was actually pretty cool. We'll talk about that as well, but we've got financials up over 20%. We've got industrials up over 16%. Then we got staples up over 15.8, almost 16%. And then of course, technology is all the way down here. It's not even in the top 5, right? So up over 14%. So investors, for the most part, were hiding into some of these ETFs for 2024. And now today, we're starting to see a little bit of rotation back into technology. We also talked about this particular chart. If you guys remember, XLK divided by XLU. This was a chart that I have talked about on the channel on my videos many times over. And what has been the overall message for this chart? That if you take a look at the overall trend, right? So this right here is the overall trend for the markets here. So XLK divided by XLU, right? So very much to the upside, right? We're seeing higher highs and higher lows. So very nice uptrend of technology outperforming utilities. So Green Dragon says, nobody knows shit, just guessing, stop pretending you guys know. Well, let me ask you, Green Dragon, do you know where the markets are going? Do you know where the markets are going? Can you tell us? Do you know? Does anybody know? So this right here is the overall trend, right? Nice uptrend of higher highs and higher lows. However, we do get these small instances or circumstances where utilities tends to outperform technology because of that market's positioning, right? Going away from risk on over to more risk off environment. And usually those are the times that technology lags. There's not a lot of leadership. And then we start to see this pullback in this relative index, right? So right now we witnessed something very similar. And this actually began in March of 2024, where technology continued to underperform. And what we're seeing right now is a little bit of that momentum back higher. So that's where we are, a little bit of that momentum back up. But the overall trend, I really want everyone to understand that technology tends to outperform it, or at least it has done so since 2008, 2009. It's been on a very, very nice, consistent uptrend with some small dips here and there for technology. So that's where we are. QQQ is up over 2.29%, new all-time highs coming in for the markets here. So we've got S&P 500 up to over $570. We got QQQs up over 2.2%. We got Nvidia up over 3.2. I really wish I could pull up my portfolio because I really want to show you guys my options portfolio and where I'm at for Nvidia. The open PNL, yesterday I showed you guys I was up a little bit over, I think the overall PNL now is up over 15% in the last 2 weeks on Nvidia alone, because that's the only stock that I'm trading right now on options. And right now it's back up to 117. So that PNL, of course, jumped higher because of that pre-market gain on the underlying. But I also need to roll out my covered calls, which I'm going to look at the premiums here as soon as the markets open right around 9:30 a.m. Eastern to take a look at where we are with that spread, right? With that spread between the buy to close on the existing calls versus sell to open on the next week's calls. I'll see where that spread is. So the spread really is going to be between the ask for the existing call and the bid for the next week's call, and with a slightly higher strike at 112. So that's the spread I'll be looking at. And if it's not a net credited, then good luck to me. I'll continue to monitor that throughout the day. So we'll see where we end up. So Julia says, I don't understand why anyone would buy at all-time highs. So I think there's a very important distinction that we need to make. If you are looking at individual ETFs and index funds, right? So whether it's the S&P 500 or the NASDAQ or the total world stock market index, I've done this experiment for everyone who's been a part of our journey over the last 3 years. Julia, believe it or not, but I've done this experiment myself. I've bought at the worst times. So literally my only goal with that experiment was buying at the worst possible times. I didn't encourage anyone to follow along or anything. I did that myself, buying the S&P 500. So essentially buying VUG. So that was the Vanguard Growth Index ETF. And I bought that every single time when I felt the risk reward was the worst and the markets were at an all-time high. And well, guess what? I'm still up over 30% on that ETF since I started that experiment. Why? Because of the power of dollar cost averaging. The dollar cost averaging, so underrated on ETFs and index funds. I think it's really important to make that distinction because I don't want to come across as, oh, Karthik says dollar cost average on individual stocks at every price. No, there's a huge difference between individual stocks versus index funds and ETFs. Index funds and ETFs, they're more aggregated. There's less volatility. There's less potential drawdown because, as we know, the markets have spent more than over 90% of their times within 25 to 30% of their all-time highs. There's not a lot of volatility in the S&P 500 over longer time frames. So when you are looking at S&P 500, NASDAQ, or total stock market index funds or ETFs, it is safe to assume, again, I'm going to use some very careful words here, it's safe to assume that buying even at all-time highs, if you are dollar cost averaging consistently over a long period, you're going to come out on top. We have done this analysis and this study many times over. In a 15-year rolling period, it's practically impossible to lose money in the markets when it comes to the S&P 500. I say almost impossible because we don't know what the future holds, but looking at the data, historical data, any 15-year period, you go back 200 years, any 15-year period, the S&P 500, if you bought it, held it for 15 years, you were higher than where you were 15 years ago. So over longer time frames, when it comes to index funds and ETFs, if you are buying at all-time highs, it does not matter as long as you're dollar cost averaging consistently over longer time frames. So But it does not apply to individual stocks. It does not apply to individual asset classes or anything else, because then you have to have an understanding of where the value is versus what the price is for that particular stock. And that's why it becomes so useful and so important to understand fundamentals, business fundamentals, the company itself. What are they doing? What's the story? What's the moat? What's the fundamentals? What's the value? What's the intrinsic value, the balance sheet, the cash flows, everything you need to understand before you even put your one single dollar into the market. Simran, thank you so much for joining. Really appreciate you. Thomas, money rotating out of bonds and treasuries. Yeah, so TLT is also, I think, down. So we are seeing TLT here down about 1.2%. By the way, the markets, 5 minutes left for the markets to open here. QQQs are still pushing higher. TLT is down about 60 basis points right now. So, as we talked about it in our yesterday's market update, that this move, for the most part, the rate cut was priced in, especially in the short to medium term, I would like to call it, because of the fact that it was kind of like a buy the rumor, sell the news type deal for TLT and for TMF. So the first 50, possibly the next 25, is also priced in because the US 10-year treasuries, let's see how much they've already dropped from their highs. So they've come from 5%, right, now down to 3.7. How many rate cuts is that already that the Federal Reserve, the Treasury market already front ran? I don't know if that's a word, but front ran the Federal Reserve. That's 140 basis points, right? That's 1.4% or 140 basis points worth of reduction in the 10-year treasuries that they have already done, right? So they're already come down to 3.7.5%. And that 140 divided by 25, that's about 5 cuts, or call it just under 6 cuts, that was already baked into this 10-year bond, right? There's a very interesting chart, which I have on my MacBook. I don't know where if I can pull it up, but it shows you the difference where the Federal Reserve's kept interest rates at 5.3% for the last 1 year, and the treasuries and the 10-year bond more specifically has come down more recently, right? So it's come down from its April 2024 highs and from October 23 as well. So it's sold off, pushed higher once again. And this is all based on how expectations have changed for the Federal Reserve rate cut. At the beginning, they were slightly earlier, right? If you remember, going back to December of 2023, markets were expecting for a rate cut not in September. They were expecting for a rate cut in May, and even prior to May, in April, in March, right? So markets, more specifically the bond market, in anticipation of that rate cut was coming down, and of course rallied back up, and then it started to come down as well. And again, there's a lot to do with the fiscal policy, the Treasury Department, because of the supply of new bonds being issued, because of the consistent deficits that have been running. So there's a lot of things at play, because the bond market is twice or at least 3 times as big as the equity market. So there's definitely a lot of factors at play. So I'm really just kind of explaining the bare minimum here, with the markets really just pricing in for those rate cuts already. So that's how I mentioned, like TLT, TMF, sure, there's going to be some upside, but not as much upside as what many people expect with these rate cuts now finally being announced. So Julia talking about random stocks. Absolutely. Random stocks, very, very important distinction. And you would be right that it is important to do your analysis when it comes to individual stocks there. Okay, I'm going to go over some of the comments here. So let's see. Make sure you do a limit order this time. Yes, Saeed, I need to do that. Thank you for reminding me, because last week I absolutely got screwed on that slippage, man. I can't get over the Charles Schwab literally just costed me over $200. They got the worst fill. It's kind of funny, because market makers, that's who you send these orders to. So they're the ones that are kind of like on the back behind of this trade. They're looking at my buy to close, they're looking at my sell to open, and they're looking at that spread. And they're like, okay, let's just give him 5 cents or 10 cents on the dollar, and that's it. They're just like making that spread there, and of course laughing about it. But I have to make sure, and that's what I recommend for everyone. If you are trading anything that is not as liquid, because I was trading Nvidia options. Nvidia options are supposed to be liquid, but as those sizes are going to increase, you have to be sure about putting in limit orders as opposed to market orders. Please do yourself a favor. Don't put in a market order, because you're going to then be at the mercy of the market maker to give you whatever fill they think is best. And they're going to make their money on top of that as well. So limit orders, use them if you are trading something that may not be as liquid, so that you are kind of guaranteeing that, okay, this is what you can expect. There we go. The market's open now. Where's that coming from? Oh, I do have Thinkorswim open. I forgot about that. So, okay, this is my P&L. I did have that open for Thinkorswim. Okay, I didn't even know that. I was like, where did that morning bell come from? But okay, so markets are open now. QQQ's up a little bit over 2.3%. P&L is just over 7,300. A lot of that consists of Nvidia calls and puts and actual shares. Nvidia is at $117 right now, pushing up very nicely, up almost 4%. Green on the day, so very, very nice move to the upside. We got the S&P 500 pushing up over 1.6% at the moment as well. I'm gonna turn off extended hours trading here, and this is where we are. So entire Max 7 having a very, very nice open. Nvidia's up over 3.7. We got AMD pushing up 3.7. AMD was Lisa Su was on Jim Cramer's show Mad Money yesterday. I gotta take a look at that as well. Then we got Tesla up almost 3%. Very nice. I'm looking at Tesla calls right now because it's now approaching some type of resistance. Once again, this is a huge, huge area of supply for Tesla. It's been struggling to break out above this level for such a long time now, and it's just not been able to do that. So I'll be looking at some covered calls. We'll see how high it goes today. If it breaks above this $235 level, $235, then we'd be the highest level since July of this year. So it'll be like, well over 2 months that we've seen these prices for Tesla. So that's a pretty good level that we're back coming up to. And I'll be looking at calls in the 300s, possibly in the 325. I already have one call in the 300s expiring in November. Is that in November? Because that's going to be post Robotaxi event. Robotaxi event is going to happen on 10/10. So October 10th is when Tesla's big day is going to take place. And I've got that call expiring, November 15th. So a month after Robotaxis. I actually may get called on those shares, but that's okay. Those are another 100 shares that I'm willing to let go at 300 because I was very overexposed to Tesla at some point, and since then I've definitely de-risked a little bit. Anyway, so here we are. If you come over to the individual sectors, because I really want to go over, liquidity-wise, what's moving higher and what is not. So if you come over to these sectors at the moment, the bond market and utilities, those are the only two sectors that are red. Everything else is green, and technology and QQQs and discretionary are up the most. That speaks volume as to where that money is going to, and that is a very, very risk-on trade in the markets right now. So that's where we are. Let me just do that 1 second. Okay. Now it should be better. There we go. Okay. So how are we doing, folks? How is everybody doing? I've also got a lot of trade flash on my Thinkorswim that I can kind of call out some of the big trades that may be happening. Somebody just placed a 5,000 put option trade on the NASDAQ 100 QQQs at 480. So 480 put expiring on September 20th. So pretty much tomorrow. So that is quite a big trade, because if we're looking at 5,000 contracts times 100, we're looking at 500,000 shares. 500,000 shares to be bought at $480. That is a $240 million trade, folks. So I've got trade flash on my Thinkorswim, so I can call out for some of the big trades that are happening. That is a bullish trade, because that person or that entity, whoever placed that put option trade, got $2 in premium for it. That expires tomorrow. So 5,000 contracts, that's a lot of premium. That is a lot of premium. So yeah, that's about $1 million in premiums off of a $240 million collateral. So that is one insane trade that just went through on the NASDAQ. So that's about a 40 basis point yield, and that makes sense. That's about 0.5%, almost 0.5%, that expires tomorrow. So if QQQs trade below 480, that whoever plays that order is going to be obligated to buy 500,000 shares for NASDAQ. So that kind of also, helps us really understand where that sentiment is. And, those are the whales. I mean, that's what I consider to be a whale. And those are some pretty big orders. And it doesn't have to be an individual person. It could very well be any entity behind that trade. And again, as soon as these trades continue to come up, I can also kind of change this to Nvidia on my trade flash and see what's going on over there as soon as that loads up. So Nvidia is not loading up right now. We'll take a look at Tesla here. Nvidia 117 is where it's at right now. Tesla also not loading up for the trade flash. If there is anything, I will certainly call it out. Anyway, okay, so Meta. Let's take a look at what's happening with Meta platforms. It was already flirting with that resistance and that area of supply for the third time, and we finally got a huge breakout up over 2%, $549 per share. 551 is the all-time high for Meta. So very, very nice momentum coming in. And this right here was the two times where it got rejected and then finally breaking out above this level. Tesla's resistance right now is literally where it is right now at 234, 235. That's been an area of supply for Tesla for a really long time. I mean, this is where we have gotten rejected twice already since July. And if you fast forward, or basically if you go back a little bit further, you'll notice that this was a support. So all support turning into a resistance where we have gotten rejected a couple times. So I would call it around 234, 235 as a resistance for Tesla that it needs to break out of. If you break out of this level, then the next stop is going to be in the 270s. Sure, it could come down, retest, revalidate that support before making its way back up to 267 or 270. Yes, talking about PayPal, and PayPal is also doing really well right now. So up over 2.86%, $75 breakout here for the first time since July of 2023. So it's been well over 14 months that PayPal shareholders have been just waiting to see $75 handle on PayPal. I mean, this is a dream come true for PayPal investors because we haven't seen this level in over 14 months. And now the next level is going to be at $76, $77. And look, over here, it was overbought. It was getting a little bit ahead of itself. As we discussed, you can take a look at the RSI. The MACD was really extended. And what did we expect? A bit of a pullback, coming back down to revalidate that support here in the high 60s, and then getting started again, right? So that's that next leg up higher for PayPal, and the next target now at $76, $77. How is our friend Palantir doing here on this very fine day? Oh, look at that. Underperformance from Palantir. How is that possible? Palantir's had a incredible year. S&P 500 inclusion up over 500%, I think, on a year-to-date basis, or might be less, because the move really started in October of 22. But year-to-date up over 113%. So an incredible amount of momentum, pretty much doubling in price, and on a 3-year basis, or really just 2-year basis, the stock is up over 500%. So I think it's okay to take a little bit of a break here for Palantir. No complaints. Considering how much it's rallied. RSI 75, overextended MACD, so that's completely normal. SoFi, on the other hand, starting to roll over just a little bit. And this right here is the area of demand, which we talked about, very strong support. SoFi has been kind of flirting in and around those levels for a very long time. And the next target for SoFi is going to be at 1031. So 1040, 1031 is going to be that level. This trade has taken a very long time to play out because I remember pointing this out in our Discord. Might have been like a couple months ago now at this point. Let me see. On the trade ideas, when did I post it? So this was on trade ideas. I posted this on SoFi in March. On March 21st, I said new trade idea on SoFi, target price $10.50. Two support levels. One of them was 675, and the other one was around $4.50 or close to $6. So $6.75, close to $6. So it really in just between these two levels here, been consolidating inside this green rectangle. The price target remains at $10.50. That's going to be that level to keep in mind. That's the target price. You can see that it's unchanged from back in March, but I think it's taken a long time to actually get up to that level because of a lot of things. And I think the rate cut is going to act as a huge tailwind for SoFi. So yeah, that's where we are with a very strong open. Look at Nvidia go, $118. Man, I should really just be looking at my covered calls and what do I need to do here? Let me just do that very quickly. I'm sorry. I should have actually done that before when the markets had opened so that I could have at least gotten some better premiums or at least a net credit in that sense. So the put that we had sold up over 91%, so I'll pretty much let that expire out of the money, and that expires tomorrow, so keep that premium entirely. And then when it comes to the 111 calls, let's see what we can do here. Because I really do want to get at least about $1. Okay, so we do have no 111, so let me just see 112. Oof, it's very close. It's cutting it close, about 8 cents net credit, and that's also a market order. But of course 111 is gonna yield another $510. 112 is barely anything right now, so I'm gonna have to wait and see how it ends up here. 928. If I actually go out to October 4th, then it's a $600 credit on the 112 call. So should have done it earlier when the markets had opened here before this big pop. But what was I doing? Looking at Palantir and SoFi. I'm just kidding. Anyway, so how buying a huge amount of puts makes it a bullish bet. So he didn't buy, or he or she or whoever it was on the end of the trade, they didn't buy, they sold because it showed up as a negative number, right? So essentially sell 5,000, so negative 5,000. QQQ's 100, 20th September 2024, 480 put at $2, and that was the overall trade. So yes, volatility here dropping back further. I'll take a look at those future contracts shortly, and then we'll see what or where we end up here. QQQ's pushing higher, 482, so 480 is their strike, so keep that in mind. Tesla's pumping 237, 4.2% higher, so very, very strong move to the upside. This is incredible momentum coming in from the markets here, cheering this rate cut on with this 50 basis points that we just got, and we got Magnificent 7, everything just pushing higher. Let me see if I can pull up the MoneyVest market concentration tab. It's going to show us a little bit about where we are with the liquidity and what stocks are gaining the most. I think it's most likely going to be Nvidia and Tesla in the hundreds of billions of dollars. Milan says, don't talk about SoFi. I just put a $10.50 price target on SoFi. You just can't win. I was talking about SoFi. I just put a $10.50 price target, Milan, okay? Calm down here. We know you're extremely long on SoFi. So how can I be talking bad? Okay, let's go over to MoneyVest Dashboard and we'll go over to market concentration. So 1.4%, we're up over $731 billion, everyone. So S&P 500, look at that money that's rolling in on the S&P 500. The big three. So we've created these indexes just for you, so you can pretty much keep track of how individual stocks and even indexes are doing. So big three, we've got Apple, Microsoft, Nvidia. They pretty much make up for almost 19% of the S&P, or just under 10 trillion. Collectively up almost $300 billion, so that's fantastic. Then we've got Magnificent 7, which also includes for all the other four stocks like Microsoft and Meta, Amazon, Google, and Tesla. And that's over 31% of the weight. 16 trillion market cap, up over 418 billion. And then if you include for Eli Lilly, Berkshire, and Broadcom, that's top 10, 36 25% of the market, over 18.6 trillion, and that's up almost $500 billion. And I guess most of that gains are coming from these top 10, or more specifically the Magnificent 7 companies. Now you can also filter this by which companies are gaining the most in terms of that market cap. For S&P 500, Nvidia is of course leading, $129 billion gain. Apple, $92 billion. Microsoft, $62 billion. Amazon, $37 billion, so on and so forth. And you can also look at different industries. You can create your own indexes. I feel like it's pretty cool feature. So let's look at where utilities are, most likely red. So if you come over here, there we go, down over 1% collectively, or just over $12.7 billion. There are 31 utility stocks in the S&P 500. If you come over to semiconductors, up $203 billion. And these are all the ones that are up in semiconductors. 20 stocks in the S&P 500, and they're all up right now. Right? So even on the second page, we've got everything higher. Teradyne, Microchip, onsemi, Micron, Enphase, for some reasons also kind of in semiconductors. Nvidia, Broadcom, AMD, Applied Materials, Qualcomm, Texas Instruments, Lam Research, Clack Corporation, Intel. Even Intel's having a pretty strong day. And Analog Devices, everything. Let's take a look at banking. So banking here, some of the big banks. So Bank of America, JP Morgan, everything up 14 billion, up almost 1%. So banks are doing well. And then let's take a look at financial services, which includes your Visa and MasterCard and PayPal. So 36 stocks up over $38 billion collectively, 4.2 trillion, over 8% weight in the S&P 500 as well. Any other sectors or stocks in the S&P 500 you'd like me to look at? So you're expecting, no, that's not me. I was just calling out a flash trade somebody made that popped up on my Thinkorswim, that they are selling NASDAQ puts, 5,000 puts. That's 500,000 shares, because every contract is 100 shares, 480 put. So they would be obligated to buy 500,000 shares of QQQs at 480 if it drops down to that level by tomorrow. So that's a bullish bet, because they're expecting prices to go up so that they can capitalize on about $1 million worth of premiums. Isn't that crazy? Like in about a 24-hour span, you can make $1 million just by selling options. Of course, you also need to put up about $250 million, $240 million trade, that is. Okay, so we already went over some of those. Any other industries or sectors you want me to look at? We can take a look at that as well. Pharmaceuticals, for example, are also up, but barely. There's a little bit of liquidation happening for those as well. 84,000 subscribers. You have a 24-hour live stream, or the deal was only for yesterday. The deal was only for yesterday, and it was only for a 7-hour live stream, not a 24-hour live stream. That would be crazy. Yeah, that would most likely be an institutional bet, for sure. Okay, so S&P 500 rolling over just a little bit. NASDAQ holding up a lot better. Tesla's just over 236 right now. Nvidia is back down to 118. I'm going to have to do something with Nvidia later today to see what kind of premiums I can get, and or allow for this entire P&L to close out tomorrow here. And we'll start fresh once again Monday morning, selling new puts on a bunch of different stocks. So that's what we're going to look at. So thank you so much for joining, everyone. Really appreciate you all. Make sure that you drop a like. Again, we'll be live tomorrow briefly for Market Open. But so far, it kind of actually feels like a Friday, to be honest, but it's still a Thursday. We still have tomorrow. We'll see how the market digests the 50 basis point cut and how high do we rally on the day today. So thank you so much for joining. Definitely join our Discord and our Patreon if you want to get access to our entire website. You can do a lot of different things, analyze individual stocks, do your full fundamental analysis, look at the market calendar, the snapshot. So we're pretty much back up to all-time highs for a lot of different indicators. So once again, thank you so much for joining. Really appreciate you all. Take care. Have a great day. I'll